So, how high exactly are interest rates going to go? Are we about to see another housing market collapse? In this video, I talk to one of the best mortgage lenders I know to help try to answer these questions and more. Coming up right now. Hey everyone, welcome back to Living in Atlanta. If this is your first time to the channel, welcome. My name is Mark Brenner and I run the Living in Atlanta team here in Atlanta, Georgia, and I make these videos for you. I talk all about what it's like to live, eat, sleep, work, play in the Atlanta, Georgia area, and we help people who watch these videos and reach out to us buy and sell homes in the area all the time. And we absolutely love it. So if you have any real estate needs around the Atlanta, Georgia area, we are your go-to real estate team. You can book an appointment with us directly using the links in the description below. All right, so mortgage rates keep going up. We are slowly approaching 6%, which is crazy because it seems like just yesterday when we had rates in the high 2s and 3s. So what is going on? Is there a recession coming? Is there a housing market collapse on the horizon? And with interest rates where they are, does it make sense to wait if you're thinking about buying a home? Well, in this video, we are going to talk to one of my favorite mortgage brokers, Stuart Sadler with Cornerstone Mortgage, and you're going to hear it straight from the horse's mouth. We're going to talk about, projection for interest rates in the future, the experience that him and his team have working with agents, seeing what the housing market is doing, and just some things to think about. And as you watch this video, more than anything else, I want you to keep in mind something. I've worked with people in all different types of markets, and I can tell you that when we're in a down market, when there's not a lot of homes being sold, when this is the time you think that a lot of people would pounce on opportunities, what I find is people actually wait. They sit on the sidelines because they're nervous about the economy, they're nervous about the market. And then when you have a really hot market, like we've had the past few years, again, people say, oh, I'm going to wait. The market's too hot, prices are too high. I want to wait till prices come down or the housing market starts to come down so that I can jump on a great opportunity. And now what you have happening is prices are starting to come down. But what happens when prices come down? Interest rates go up. Okay, these are inverse relation to each other. Okay, so the moral of the story is people always have excuses and why they're going to wait. They always look at one factor, and I think that's the biggest mistake when you're talking about a home purchase. And I always talk about looking at a home purchase as an investment property, even if you don't intend it purely for those purposes. And when you're looking to purchase an investment property, you don't want to just consider one market factor like the price or the interest rate or how good the economy is doing, okay? You need to look at a lot of factors. One of the factors we're going to talk about in this video is, although interest rates are going up, this could be a good opportunity to purchase because we're going to see less crazy bidding wars. We're going to see people able to get into houses that maybe they couldn't compete with a few months ago. And overall, you're probably gonna just see a less stressful buying situation. So yes, interest rates are going up, but please remember that is not the only factor you should consider when making these big decisions. So let's get right into my interview with Stuart Sadler of Cornerstone Mortgage. All right, so I am here with Stuart Sadler with Cornerstone Mortgage. So I talk a lot in my videos about the importance of a good lender, right? The market has been crazy, and I talk all the time about why the lender that you choose actually is one of the tools you have in your toolbox for getting under contract and having just overall a low stress experience. Stuart and his team have been honestly one of my secret weapons. And not just because they give great service, the rates and the prices are fantastic, but one of the things I talk all the time about are timelines. So financing contingency timelines, appraisal contingency timelines, and closing time periods. We don't have to get into the details of all of that, but Stuart and his team can move very quickly with this. So as an agent representing buyers, it allows us to be very competitive, really get as competitive to cash as possible, and in most cases beat out a larger lender who moves more slowly. So with interest rates going crazy, I wanted to have Stuart on because we've done a lot of business together. He's been in the business for a long time, has seen a lot of up and down. So, Stuart, thanks for joining me today. How you doing, buddy?
I'm doing well, man. Thanks for having me. Super excited. I watch all your stuff out there on YouTube, and I think you're just so informational and provide so much value. I'm just honored that you asked me to be on here with you.
Absolutely, man. I know you do lot of video marketing too, so I'm glad we're connected on this. So, just want to run a few questions through you. I mean, interest rates are going up, but there's a lot of information going out there, right? Everyone's wondering, like, okay, the economy, are we going into a recession? Is it another housing market crash? Now, I can share a lot of things from the agent side, but I wanted to bring you on because you're the financing expert. So let's just start with interest rates, real simple. What are you currently seeing with interest rates, and what are your projections for how we'll finish out 2022?
So great question, Mark, because it's the one on everyone's mind right now. So if you've been looking for homes for since last year, rates in November were in the high twos. And right now, if you have perfect credit, conventional mortgage, everything looks great. You're somewhere in that 5.625 to 5.875 range yet. Most cases haven't gone over six unless there's other pieces going on with the loan. So rates have definitely gone up quite a bit. And there's multiple things there. The biggest one is inflation, right? Inflation is higher than we need it to be right now. And the Fed's tool to fight inflation is to raise the Fed funds rate. And with everything going on, that's why interest rates are going up right now. So it is absolutely the case. But Mark, the big thing right now that I need people to understand is that interest rate has pushed some buyers out of the market. There's some people that just can't afford the home they need to be into.
Mhm.
That's not the case for a lot of clients. Some of it's just the fear of rates and the economy and everything.
Mhm.
Because what I've seen, I've owned the company for 16 years. I started in '06. I went through '08 and '09, and I've gone through a bunch of ups and downs. I will tell you without fail, the last 18 months has been the most stressed my buyers have ever been due to inventory,
Mhm.
because they just are making multiple offers. They're not getting accepted. They're going above list. It's just been 10 to 15 offers if it's a good home, and people keep missing out. So interest rates going up is scary, but what it's doing right now is you're seeing the market shift. And there is more properties on the market right now. You're not having to go above list on everything. Sellers are starting to contribute closing cost again. It's shifting back, so the buyers have a little more control of the process. So that is the positive note. And if you look at interest rates historically, rates hit the twos during COVID. That's never happened before. In my experience, in my opinion, two to threes was a gift we got because of the pandemic, but it's not something we're going to see in a normal market. I think 6% is high right now. It's starting to go high and it's not uncomfortable. But what people need to realize is you're going to lock in most of the time for a 30-year interest rate, and your interest rate can never go higher than that. But my prediction is as we fight inflation, you're going to see rates continue to move.
Mhm.
If they get inflation under control, I think rates will calm down. I don't think you're going to see them drop a lot right now, but what we're just hoping for right now is some sideways movement, right? Because they've just been going up fast and that's stressful. So we're hoping that'll calm down. I personally believe we're going to head into a recession.
Mhm.
The data's out there, and hopefully not, but that's more than likely what's going to happen. And once we do that, you're going to see rates come back down, because the Fed's going to say, hey, now we've got out of inflation. Now we have to get out of the recession. So if I was going to look right now, I would buy a home without fail, as long as financially I could still afford it, and just know that I'm going to get a home I really want without having to compete against 15 people. And when rates drop, I'm going to go ahead and refinance at that point. And this is super important now, because Mark, and I'll let you talk to it, inventory is still going to be an issue. We
Mhm.
just have not built enough homes over the last couple of decades, specifically for Atlanta. Everyone's moving here. So we're going to still have an inventory issue. My fear is if everyone pulls out of the market and waits for rates and jumps back in the market at the same time, we're going to be back to the multiple offer situation, to paying over a list. So if you can afford it right now, in my opinion, buy now. And I saw someone post this and I love it. It said, marry the home and date the rate.
Mhm.
Get in the home you really like. And when everyone else is trying to be out there in the bidding war, at that point, you already have the home and you just need to refinance your mortgage.
Yeah, you brought up a really good point that I want to drive home. And for those watching, remember we are talking about the Atlanta market, and you can't just look at the fact that interest rates have gone up. You have to take in mind what the experience has been for a home buyer over the last at least 24 months, maybe even last 3 years. We've been in an extreme seller's market. And if you've tried to buy a home, it has been extremely stressful. I'm sure a lot of the people watching can attest to that, even if they're not in Atlanta, maybe in another market. But you cannot just look at one factor like interest rates because, like Stuart was saying, the stress, the market can, I know as a real estate agent, I've had to do probably 2 to 3 times the amount of work to get buyers under contract that I would have done in a normal market just by virtue of writing more offers, doing more showings, getting told no more. Um, and that obviously has an impact on the experience for buyers as well. So, does interest rates going up hit your pocket? Of course, but we may also be going into a situation where there's less of that craziness. You're not competing against 15 to 30 to 40 other offers. The price isn't being driven up, 60, $70,000 above the list price. So everything in real estate is a trade-off, right? Interest rates go up, prices come down, vice versa. And when you have the market shift a little bit, you have interest rates go up, obviously that the that's for inflation, but that's going to have a big impact on the experience that the home buying process. So,
And there's a couple of things, Mark, I want to jump in here real
yeah,
quick.
please.
Number one on it is not even, it was the stress, but I honestly had a ton of buyers that got houses they didn't love. They're like, I need to be in something. I was like, I always do the, hey, congratulations. What are you excited about? And they're like, well, I got a house.
Mhm.
Well, did it have everything we talked about? No, not really, but we needed to get into something. So like, I think the new market you're going to be able to get, it's always wants and needs, right? You got to fulfill your needs and hopefully get some of your wants. And I think we're going to get back to a place where they can do that. Number two, I believe very strongly in our local market. I'm not nationally, I can't tell you everything that's going on, but the other big thing is people think they're buying in a bubble. Supply and demand, home appreciation, I think I saw an article the other day, was like 37% over the last 2 years. It's not sustainable. So that has to calm down. But if you're going to buy a house in Atlanta and be in it for the next 5 years, you're never going to lose money on it. So yes, you might pay a little more for a rate over a couple of years period, but appreciation is going to make that up and then you're going to refinance. I believe in our economy. I'm buying more stocks now than I have been because I think everything's going to bounce back and it's on sale. So if you can take a step back and say, hey, I believe in this real estate market. I'm going to buy now, get in the house I really want, and just know the rate's not perfect, but I can refinance. I think they're going to be in a much better situation than they're going to be in a couple of years when rates drop and everyone else jumps back in the market.
Yeah, great stuff. So two things I want to hit on that you just mentioned. Number one, let's take two scenarios. Scenario A, you have your wonderful low interest rate and you're in an extremely hot market like we've been in. And like Stuart said, maybe you're in a situation where your back is against the wall and you just decide to kind of settle on a house. And then, you're in that house, you've got a great rate. Okay, that's scenario A. Scenario B, the interest rate's higher, but the market is less competitive. And now maybe you're in more of the house that you really wanted because there was less competition. Your rate's higher, but guess what? You can refinance at some point in the future. It's not really as easy as just changing out a home, selling and buying again. So I just wanted to, finish off that point that you were making. And then, yeah, Atlanta, look, everyone asked me like, is the housing market going to collapse? We can only talk about Atlanta. I mean, I have a lot of opinions about this. I think the experience that people had going through 2008 left a permanent imprint on their mind to where they think every few years the housing market collapses. But besides that, I always talk about the fundamentals of Atlanta, right? And because I work with a lot of investors, and that's why I got into this space. Real estate investors like Atlanta because of the population growth, the people moving here, the diversity of the job industries, right? We are not dependent on shipping per se. And if that industry fails, like half the people in our city are going to lose jobs. Like maybe some cities in the Rust Belt may be more like that. Like we have medical, TV and film, we have finance, we have higher education. We have so many industries that are driving the economy in Atlanta. And we also have some just macro factors, like we have a mild, nice climate, right? We don't have a lot of natural disasters. So I'm very bullish long term on Atlanta. We have a lot of room to grow, and because of those factors, and just what Stuart was saying, we have simply not built enough product, enough homes for people over the last 10 years. So it's a very simple supply and demand issue. So, we do expect to see prices maybe come down a little bit because they were, going up unsustainably. But that does not mean people are just going to stop buying and selling homes in Atlanta.
That's correct. And I get the question, are we going to see a lot of foreclosures? And in my opinion, no. In '08, everyone was in with 100% financing, 5-year arms, and homes they barely qualified for. Since then, you had to have down payment. You had to have good credit. And with the appreciation, if people get to a place where they can't afford it, they're not going to short sell or foreclose it. They're just going to be able to sell it on the open market. And you might be able to get a better deal on that. But I just don't see a lot of that coming in our local, market.
100%. All right. Well, I'm just going through our questions here. We already just naturally covered so much. We talked about how, and you work with a lot of agents, Stuart, right? Like, I have my experience, but you're unique in the fact that you work with multiple agents. So I'm sure you get a lot of the experience or just like what they're experiencing. But what are you seeing? Are your agents communicating to you like less bidding wars? Like, well, I share what I see in the Atlanta market, but what are you seeing in the real estate market in Atlanta as these interest rates have gone up?
100%. It's shifted quickly, Mark. So we've gone from maybe even a month ago, the 10 to 15 offers. What I'm hearing right now, because I talk to agents all day and I'm on the phone getting like local market perspective. And you mentioned it. The cool thing with me is I get to see people all around Atlanta in different markets that see different things. But what I'm seeing is you're having some multiple offer situations. But what I'm hearing is it's 3 to 5 offers instead of 10 to 15. And I'm hearing it's more the exception than the norm right now.
Mhm.
We're talking about perfect school district, yard, everything's great. It's just a house that everyone wants. Those are still doing it, but we're starting to see things sit on the market longer. Like I had a bunch of freak out calls this week. Like, hey, I listed a bunch of stuff this weekend. I haven't had any showings. What are your other agents seeing? What are we looking at there? And an interesting thing I figured out, Mark. So I'm a business coach for a program called The Core, and I coach students throughout the US. And what I've realized is stuff starts on the West Coast and moves its way over to us when there's big shifts. And I had students on my call last week from California, Seattle, and Arizona, and their markets shifted even more. They're seeing stuff sit on the market 30 days. They're seeing seller paid closing cost again. They're even starting to see some contingent offers getting accepted. And it makes sense, right? We do have a certain amount of buyers that have pulled out because of interest rates and affordability. And then I think we have the sellers that know that if they're going to ever sell their home, now's the time to do it. So they're going out on the market. So inventory is up and demand's down. And it's just creating a more level playing field for the buyer, which had to happen. Like I felt like my buyers for the last 2 years had to be willing to give away their firstborn to get into a house that, like I said, they liked, but they weren't overly in love with. It was just hard to get into a property.
Yeah, it did have to happen. And, the reality is, um, the conditions we've been operating under the last 2 years have really been extreme. And, you experience them for a while and it starts to be the norm, but no due diligence is not normal, right?
No, absolutely
4 to
not.
5 days due diligence. I mean, I know that you've worked really hard to drop down to timelines that you probably would have never dreamed of. I mean, getting an appraisal back in 5 days like that, the market has forced us all to up our game in some ways, but also, when you're buying a house, you can only rush things so much and do it in a smart way. Like you need to have some time to make sure the home is in proper condition, to work with the sellers to, address things that need to be addressed. The lenders need time to get people's financing order, underwrite the loan. The attorneys need time to make sure they're conveying clean title. And when you have the market conditions that we had over the last few years, everything is compressed because everyone is trying to be competitive and win the deal. And so, Yes.
And Mark, to that point, I've been in the business 16 years. We've done 20 or $30,000, 20 or 30,000 loans at this point. Like I have never would have thought I've been in a scenario where everyone would be willing to pay over appraisal. Prior to this market, it might have happened one time in my career. During the last 2 years, it almost became the norm. Like
Mhm.
we're upfront saying, hey, if it doesn't appraise, they're not going to negotiate with you. You're going to have to be able to bridge the gap. And we've had appraisal gap strategies and how to use the mortgage to make that work and things that the no due diligence. I've had a lot of clients feel like they had to do it, which is super scary because the house could look great, but you got to be able to check the foundation and the big ticket items that are going to come up. So to your point, some of the things have made us more efficient. Like we can pre-underwrite quicker, we can get appraisals quicker, we financing contingency, we can shorten down a lot, but there's some things that needed to come back to the market to protect the buyers overall.
Yeah, and I don't want to get too in the weeds in the real estate process stuff, but I always encourage people to look at their home purchase as a real estate investment, even if they are not purchasing it specifically for those purposes in mind. But what a real estate investor looks at is a lot of times cash on cash return. And if you're just comparing scenarios, because you interest rates high, that's bad. That's a very simplistic look at it. If we're coming at a scenario where we have very low interest rates, but number one, you're never going to have a seller cover any of your closing costs. So let's just say typically you've got $8,000 to $10,000 out of pocket to cover your closing costs. And then a lot of buyers that I've worked with have covered an appraisal gap. So let's just say you're covering 5 to 10,000, and that's on the low end of an appraisal gap. So that's in that scenario almost $20,000 of liquidity that you are giving up. That's not in your bank account, and now you're in the home that you want. You've got a great interest rate. Again, versus what type of scenario could you be looking at now? Maybe you get a buyer to cover $5,000, half your closing costs. Maybe you don't have to do that appraisal gap, right? You can just purchase it at the appraised value. That potentially, and I know these are all hypothetical scenarios, but they're based on very real scenarios. That's potentially a lot of cash that you keep in your pocket. You can use that. Now, the reason investors care about this is because any capital they can keep can be deployed to make money. That's money that you can put in an account that will bear interest or stocks or whatever investment vehicle that you like. So you just have to think about this in more than one way. It's not just prices up bad, interest rates up bad. You have to look at the entire how the market will affect the overall experience and how it hits your pocket. So
100%. And then rental rates are continuing to go up as well. So if you're renting and you're looking to buy, if you truly do a financial analysis and let someone like me look at it, the numbers are never as daunting as they think when they look at the actual data, right? What are you paying in rent? Here's your new mortgage payment, but immediately part of that goes towards paying down your principal. And then you look at appreciation, there's just other factors to look at and make sure you understand that you're making the right financial move for you and your family.
yeah, again, we're talking about Atlanta. Renting in Atlanta is no easy task. Okay. Rent prices have gone up very, and I know this is the case across the country, but specifically in Atlanta, we have a shortage of housing for purchase, and we have a shortage of housing for rent, right? And so rent prices often will mirror a mortgage payment, and it's also very competitive. Not maybe like New York where they're waiting around the block, to see an apartment, but you're talking about, I mean, I've seen lease agreements asking for 1 to 2 years agreements, right? You're not going to get month to month. You're not even going to get 3 to 6 months. And if you do, they're going to trump up the price. So you have to look at what your other options are. Again, you can refinance. Now, we don't know when the rate will go back down, but I know I bought at 4.5% and was able to refinance a few years later at a much lower rate. So you just have to weigh all of these factors. But so that's good stuff. So Stuart, shared a lot. I really like all the topics that we hit, but I really wanted you to talk about, if you can just break down what you guys do, what a great lender does in differentiating a buyer in this market? I think people want a good price, obviously. They want the best rate. People get very obsessed with the rate.
They do. Because that's
And
what's in the media. That's what they're told. The rate's important. It's a big factor, but there's other things to look at as well.
And that's what like Rocket Mortgage or all these big companies, that's their bread and butter. Like we will get you 0.02 below the competitor or whatever. And, a lot of times it's false advertising, I think, in some cases. But
in my opinion, it is, because they just show the rate and they don't show how much you're paying to acquire that rate. When you get an interest rate, you can always take a higher rate with less closing cost or a lower rate with more closing cost. And it's points, it's discount points, it's a buy down. And a lot of times when you see advertising, you say, why are they so low? And if you read the fine print, it's a 2-point buy down. And if you have a $500,000 mortgage, that's $10,000 out of your pocket to maybe move your payment $50. And what I always do with clients is I show multiple options and say, hey, let's look at what makes the most sense. If we buy it down, our break even is going to be 26 months. Are you going to be in the home for how long? And then especially with rates being as high as they are, I don't like buy downs as much right now, because I wholeheartedly believe most people are going to refi in the next couple of years. So it's just understanding how to best utilize your money. Because when I ask people, I send over 2 options. I say, hey, have you had a chance to review? They say, yeah. They're like, I want the lower rate. I was like, that's awesome, Mark. Either rate makes sense, but let's talk about the math. And 8 out of 10 times, once we do the analysis, they take the slightly higher rate and lower closing costs because they understand how to better utilize their money.
Stuart, tell me, what are you and your team doing to give buyers that you work with a competitive advantage in what is still a hot market in Atlanta?
Absolutely. And Mark, the big thing we do up front is when we take an application from someone, we go through all the details and make sure they're fully pre-approved before they start looking at homes. In the lending world, there is 2 types of letters you can get from a lender. There's a pre-qualification letter and there's a pre-approval letter. Pre-qualification letter means I look at your credit, you tell me over the phone how much you make, how many assets you have, and I say, Mark, everything looks great. I can get you a loan. Here you go. I don't think we'll ever have pre-qualification letters anymore. I think even when the market calms down, we're going to be in a pre-approval type situation. Pre-approval is basically anytime you're getting a loan, it's all about credit, income, and assets. So what we do is once we take an application, pull credit, we're going to get income from the client. We're going to get their tax returns, W-2s, pay stubs. And for assets, we're going to make sure they have the down payment, closing cost, and we're going to go ahead and get all of our documentation. And we're going to review it with underwriting. And basically, we're going to issue a pre-approval letter that lets everyone know that, hey, this offer is solid. And what I do to kind of separate myself from the competition is, since I'm local, most of the agents have worked with me or know me. I'll always call the listing agent, because sometimes on the listing agent standpoint, they're looking at 5 or 6 letters and they don't know how to tell the difference. And I'll just let them know the process we've gone through. And if they go with our offer, we're 100% have no financing issues and can close on time. And what that allows us to do, Mark, is we can do 0 days on financing contingency once they've given me all their documents and I've reviewed it with underwriting. So we can take the seller's worry about financing off the table day 1.
Yeah.
So that's the first step. And I have a 5-step process that I'll quickly walk through with you.
Okay. Yep.
Step number 2 is making sure our clients are looking at the right price point. When you're going to buy a home, it's usually like when we ask someone, they're like, I'm not really sure yet. This is what I'm thinking. But there's a lot of moving pieces. But if the client can just let me know what's the most they can bring to closing and what the most they want their payment is, I can use those 2 numbers to help structure the mortgage and say, based on what you're telling me, Mark, if this is the absolute highest you can go, if you found a perfect home that checked all the boxes, you need to let your agent know you don't need to look at anything above $450,000, because based on your cash to close and your payment, that's the highest we can go. So anything 450 and below. And the reason that matters is we don't want the client to go fall in love with a $600,000 home and then realize the numbers don't line up with their personal financial goals. Because one, I always tell everyone, buyer's remorse on a television is one thing, on a house is another, right? We want to make sure if you do get in this house, you can sleep at night and you're comfortable. So just making sure that they are, because if they start looking at homes above that price point, then the process is a lot worse, because obviously a $600,000 home is a lot different than a 450. So there's not going to be any $450,000 home that they're excited about anymore, because they started out looking at the wrong inventory.
Got it. So is that all the steps, or is that all the steps you want to take me through?
Yeah, I'll run through 3, 4, and 5 and make it super quick. Number
Yeah.
3 is having a strategy based on your down payment.
Mhm.
This is shifting as the market shifts, but prior to recent, and it's still applicable in some areas, if you were putting less than 10% down, if you were doing FHA, if you were doing VA, those offers were harder to get accepted. And we have a cash offer through a company called Ribbon that we were using that for.
Mhm.
If your client's putting down 10% or more, the appraisal becomes less important because of the appraisal gap strategy we discussed earlier. And we won't go into detail, but basically if you're putting 10% down, it doesn't appraise and you still want to buy it, we can drop your down payment to 5%, keep your cash to close the same, and your payment only usually changes by 40 to 60 bucks.
Right. Okay.
Number 4, you mentioned already, is I have a local appraisal panel that can get appraisals back in 5 days. And there's 2 things very important with that. Even as we shift into the new market, the appraisal is the biggest concern because of how fast homes have gone up. If you go with a national company, they usually have appraisers from all over. So I had a case where I used to work with a bigger bank and I ordered an appraisal in Atlanta and I had a guy from Macon come to do it because they're basically signing up nationally. All of my appraisers on
Which
my
for those not
panel,
familiar with our area is very far from Atlanta.
yes, a very different market for sure. No one can choose a direct appraiser anymore. That's regulated, but I can set up a panel that gets assigned.
Mhm.
And all of the appraisers on our panel were referred to us from real estate agents, clients, people we know in the industry.
Okay. All right. What's 5?
And then the 5th and final one is the local lender matters so much, just because in this market and even in the new market, there's just not a lot of accountability with the big banks, credit unions, out-of-state lenders, online lenders. They want to know someone. They know that my reputation's tied to closing on time, and my office is in downtown Alpharetta. They know if they need to stop by where I am, and who you work with really matters.
It really does. And, we're tooting our own horns here a little bit, but it's the truth. I mean, like if I have a listing and I'm looking at 5 offers that are, relatively the same number wise, and I'm digging into the financing a little bit, and then Stuart gives me a call and says, "Hey, Mark, listen, my client so and so put in an offer on your listing. This couple is rock solid. They've already, been partially underwritten. All their financials are solid. Like it's a slam dunk. They're going to get approved for the loan." That goes a long way, right? Because, Stuart has been doing business all around Atlanta for many years. And, if I have one offer where he called me on and then another offer that's same number wise and it's Rocket Mortgage, I'm gonna go with that I'm going to communicate to my seller client that I feel more confident that Stewart is going to get the job done, or I just trust what he says about the client that he's representing, right? So these are realities in the market that do impact your competitiveness. When you're going to buy. So these are tools that you need to be aware of.
And Mark, I want to toot your horn really quickly before we get off the call too. Like the agent you work with really, really matters right now. It always has mattered, but I always tell you, I love your business model. You tour neighborhoods, Atlanta, you're looking and you're preemptively looking at stuff, right? Markets before anybody wants to go to it.
Mhm.
In our new market, my concern if someone doesn't have a new agent is, say this agent's been in the business a couple of years or even longer. They've gotten so used to, hey, in order to win, we've got to go 10% above list. We can't do any contingencies. We can't do that piece of it. And yes, there are still some of those properties out there, but if you know the area and you know the data, you're going to advise your client properly and say, hey, this has actually been sitting for 3 weeks. Everything in this neighborhood slowing down a little bit.
Mhm.
We don't have to be as aggressive on this one. I think we can still win the offer without having to do all the bells and whistles we had to do in the past. So just knowing someone that knows the local market is invaluable right now. Because I always heard the saying, you don't make money when you sell a home, you make money when you buy a home.
Oh, for sure.
And you've got to buy right and know what you're getting into for sure. So just your expertise is invaluable right now.
Yeah. Well, thanks, Stuart. I appreciate that. And I'm actually, I mean, look, we don't know what's going to happen with the economy. Hopefully nothing too crazy, but I am looking for a little bit more of a balanced market, supply and demand wise, because I think it's just a healthier market where people are less stressed, and less big mistakes happen. And we could talk about this for hours, but less big mistakes happen when people have time to really do their due diligence on things. So good stuff, Stuart. Thank you for your time. Thanks for all the hard work that you do for our clients, and I'm sure we'll have you on again to talk about the state of lending and the Atlanta real estate market real soon.
All right, Mark, thanks for having me, man.
Absolutely. All right, so there you have it. I think that was a great discussion that we had. Obviously, bringing you a perspective of someone who's an expert in this particular field for many years. And so, look, your personal situation is going to dictate when the best time to move forward on a home purchase or home sale is, but do not have the mentality of the masses, which is, oh, there's a housing market collapse, even though there's no evidence of massive mortgage fraud like there was in 2007, 2008, or, oh, prices are so high, I'm gonna wait till the market collapses and capitalize on dirt cheap real estate, which actually never happens. People who say that never pull the trigger. Okay, so when interest rates go up, yes, that does have an impact on your situation and your buying power. But remember, you can always refinance in the future. In my opinion, you always want to be on the lookout for high quality real estate. So hopefully that video provided you some value. You can always reach out to us, schedule a Zoom call our cell phone, email us, text us, whatever you want to do. We love to hear from you, and I hope you check out these next videos. See ya.